Hi, I'm Nussbaumer from macrobeat.co.uk. A somewhat more balanced week in terms of the markets expect maybe for the Wednesday where we had a rather nasty day on equities. But generally, it seems the market is trying to sort of find its feet. We seem to sort of consolidate a little bit and looking at what sort of data we're going to have out there. We had a quick, massive spike in oil yesterday on the back of Trump's tweet talking about he's having had chats with Saudi Arabia and Russia, and that there might actually be an OPEC plus emergency meeting next week. Oil rallied like 35% at one point. I think we settle around 25%. Again, this morning it's rather supported again, as it seems the idea of an OPEC plus meeting is kind of clinging on. I still think it's probably a little bit too much to expect 10 to 15 million barrels per day cut. But in the short term, the market is running with the story. Obviously, you know, what we start to realize now is there's a lot of damage out there, no doubt about it. We're getting data that just shows how bad the situation is really looking out there, despite the strong action by governments as well as central banks to try to help out as much as they can. In terms of slides, I want to start with the US jobless claims. And to be honest, this is not just directed at the US. I could have picked like whatever, you know, PMIs in Europe, whatever. This is more a symbol for what's going on out there globally, really, rather than just the US. But with 6.6 million of fresh jobless claims yesterday, adding the 3 million from the week before. So we have like an unprecedented 10 million unemployed over 2 weeks, and that might sadly be just a start. This chart just shows quickly the sort of back what happened in the last 30, 40 years, and you just see even in other crises in the past, we've never ever experienced something like that. So that might be the frightening thing out there. On the next slide, I want to show the interesting chart that I got, that I borrowed from Nordea Markets, from Andreas Steno Larsen. He allowed me to use that chart. This is the excess. The dark blue is the amount that the Fed is printing dollars. The blue is the DXY. And as you can see in the past, this has really correlated nicely. So this sort of dollar rally out there is a bit against the odds of the massive liquidity the Fed is pumping into the market. The balance sheet is reaching 5.8 trillion. So I still feel at some point the dollar will have to react to that. And if it doesn't, I still think the Federal Reserve will actually have to come in and conduct FX interventions. On the next slide, we have the dollar index. As we can see there, we had the big rush up to 103 in this first big panic early March. We then had the big sort of sell-off after the Fed went all in with unlimited QE, with ordering all these global swap lines. And just now in the last 2 days, the dollar starts to sort of come up again. So we had an 8% rally, we had a 5% sell-off, and now a 2% rally again. The dollar has to stay under control. And I show you, one of my latest slides will show you why. So I still expect the dollar to sort of run out of steam at some point and really correlate with what the Fed is actually doing. On the next slide, gold. Finally, that big liquidation that we have seen early in March is over. We now start to see what the sort of up move again in gold, which it should really do with this massive stimulus out there and the heavy amount of money that is getting printed. So just probably a question of patience, really. But I would expect the 1630 level to break soon, and we're going to go back to the highs and possibly higher. The last slide, and this is what I'm alluding to in terms of the dollar damage. This is dollar rand. We have broken the extreme highs of 2016. We just continue just going north. This is a symbol for many other emerging markets. And if this dollar doesn't get under control, the situation out there could get a lot worse, and there will be a lot more problems out there in the world if the dollar is going to go on an uncontrolled rally, whether this be in emerging markets or, you know, at a later stage in G10 as well. So I still do not drop the idea that if the dollar does rally back up after what the Fed has done, there's a risk of interventions, FX interventions. This is it for me. Have a lovely weekend. Stay safe. Thanks very much indeed. Bye-bye.